in the short De-SPAC ETF. And for what it's worth, I go through 1,700 charts. I come up with about 3 to 5 ideas a month, and I act on 1 or 2. So that's the wheat and chaff aspect of this. And this is how I did it when I was, running hundreds of millions of dollars for mutual funds and hedge funds. It's the same process, and I'm going to keep doing it. What I want to see is, especially if something has come down a great amount, based, and then you see a volume pickup. And you see this here in the chart. Didn't have time to draw the arrows that I normally do. But so this ETF, short De-SPAC, has come down and built a base, and now is breaking out on above average volume. And so I bought this. I alerted my sons, Bobby and Jack. And if you want to join that service, we'll discuss it. So give me a call, 610-331-4283. So short De-SPAC ETF, SOGU is the symbol. And it's pretty self-explanatory. We've talked about SPACs a fair amount. Everybody's got one, it seems like, kind of like podcasts. I don't know how many SPACs have been created. 200 plus, I think, is the number. And it's a way for companies that either can't or don't want to go through the traditional IPO process to go public. The SPAC buys the private company, and you add water, and you have a publicly traded company. These are the companies that have already committed to acquiring a private business and have gone public. So they've de-SPACed, and they've become ChargePoint, Nikola, Ride, Clover Health, etc. There's 25 total that are short in this ETF. And so just off the top of my head, I've got reasons to get excited. You have lockups that expire so that people that can finally get out are selling the shares. You have valuations that are lofty at best. You've got many lousy businesses. I'll go into that. The SPAC dynamics is that you raise a bunch of cash, you put them in treasury, and the leader or the manager of the SPAC has 2 years to do a deal. Well, the clock's been ticking, and so if you don't do a deal, you don't get the fees, and you don't get 20% of the company. That's starting to work its way out. So what's happening? The pressure to do deals is increasing. The quality is declining. They might argue with that, but I'll stick to my guns. Shaq, A-Rod, Colin Kaepernick, everybody's got a SPAC, and they're all looking for companies. And so I just think that backdrop promotes poorer quality companies getting into these ETFs, and I think they have. This particular one is very EV heavy, electronic vehicle, and a couple things. Number one, I've talked about it before. I think Tesla looks heavy to me, and had to sell Bitcoin to meet the quarter. So I think Tesla's going to have a hard time making a lot of money from here, going up a lot from here after a monstrous 2020. And here's something I don't think people could consider: the grid can't handle all the EV requirements that these lofty projections are calling for. And when that comes to light, I think we're going to start seeing the EV enthusiasm, all those cells in the spreadsheet going off to the right, coming down. Google alerts are going to kick out a heck of a lot more, and I want to get your feedback. Tell me what you think, but I think shorting companies that have been SPACed, so to speak, is a pretty cool strategy as we go through the rest of the year and into next. Just as a sort of a gut check, I go to the fact sheet. I didn't print that here. I should have. Go to the fact sheet, which all these ETFs have. Go to the top 10 holdings. Just pick the top one, which is probably the one that's performed the best. The one that has risen the most. In this case, we're betting the other way. We're going short. This is ChargePoint, CHPT, charging stations in South California. Full disclosure, I have not done what I used to do in the old days, go through all the filings, 10Q, 10K, call the company, call the customers, call the suppliers, call the competitors. I haven't done that. But what I have done is I've gone to, look at some basic metrics and look at this. They're losing money. Their revenues are $32 million a quarter. There's very little growth. It's an $8.4 billion market cap. The short interest has come way down, and wait for it, the technicals now are deteriorating. And finally, you have people that argue about shorts. they say, well, valuation isn't a catalyst for betting on a stock going down or an ETF going down. You're right, but I think now there's enough technical clues that are pointing to these stocks are going down, some to zero, and there's 24 others to diversify our risk. I like our chances. So that's my take. Here's my take. Cut your losses, let your winner run, and shorting SPACs, De-SPACs via SOGU is very promising to me, and I'm talking my book. I bought 10% of the portfolio the other day.